Well, good morning, everyone. Welcome to our Wednesday morning trading session. My name is Eric Senft, and I'm going to be your host here for the next hour and a half as we look at the markets using the DTS system. A real quick overview for those of you who are new to the room this morning. The DTS system stands for Diversified Trading System, and it's diversified because we're actually looking at the market from three different points of view. So here in the top left, we have the Hawk Micro Scalper. Top right, we have the Falcon Swing Trader. Bottom left, we have the Eagle Trend Trader. And the bottom right, we have the Raptor. This is the latest addition to the DTS family. The Raptor actually incorporates elements of the Hawk, the Falcon, and the Eagle all into one trading system. Let's take a look, or the charts I'm following here are the NASDAQ. I'm also watching gold and crude oil, but I would be happy to take a look at any market which is of interest to you. You can see from the overnight, the market is really still very quiet. Yesterday was another relatively choppy day. We did have some opportunities, but we had to wait around for them for a while. Looks like the overnight's still kind of stagnant. Prices fell off a little bit before the open, and now here we are, kind of filling that little bit of an opening gap that was there. So FOMC minutes out this afternoon, and that's probably going to put a wrinkle in today's trading, but I'll show you some trades nonetheless. Here on the Hawk right now, on our Hawk scalper, we're actually producing a first micro-macro cross signal. And this is one of our high probability signals. All signals develop the same way, regardless of the tool that you're using. You're going to get a warning dot and an audio alert when the signal is first starting to print, and then a triangle and a hash mark when the signal is complete. That tells us it's decision time, and we have certain setups that we like to look for. The first micro-macro cross signal, pretty easy to identify really. It's a very high probability signal. It occurs when the micro line, that's this thin one, crosses the macro line. And it's the first signal where everything is in sync. So we have green bars, green trend lines, green filter, and green signal. The only thing I'm missing on this particular trade is a decent retest of the low, right? We don't normally expect the markets to turn on a dime. Rather, we expect them to retest the lows, at least to some degree, and then head higher. So to take this trade, I would actually have to cover it relatively deep in anticipation that we may see a retest of the lows. Our first micro-macro cross signal is now drifting into a macro pullback signal. That's also one of our high probability signals. I could set it up to take it like this. At the moment, though, it's still very early. We're only a few minutes into the session. I'm just doing this for demonstration purposes. So if you're looking for a trade to follow me in on, this may not be the best one. What I'm going to try to do is I'm going to try to show you how the automated stop trailing system works. That's part of the trade manager here. We have 16 different stop strategies to choose from, and they're all fully customizable. I'll let you see what those look like. You see these blue dots that are on the screen? That's our stop strategy. And you can see that I can make changes to it to make it perhaps a little bit more conservative or a little bit more aggressive, whatever the case may be. So this stop right now is the ATR stop. I don't want to keep my stop quite so tight, which is why I've disabled it just for the moment. And I'm going to adjust my, come back here. I was going to try to adjust my trade, but I guess I'm right back to where we were. You see, we had a slightly better entry here as we produced yet another signal. Now what I'm doing is I'm deleting my break-even trigger and my profit target, which I have preset, but I'm only doing that so that I can show you, again, the auto stop strategy here. I'm hoping the market is going to break out above this high, in which case I will engage my stops. And we'll let the trade manager manage our trade from there on out. Come on, get up there. Nice thing about the trade manager, and this is a very important concept for those of you who are perhaps new to money management and how to correctly manage your trade, is this component right here, is the risk component. I'll show you a little bit more about that in a moment. But the trade manager quite literally protects my risk exposure by never allowing me to risk more than I can afford to lose. So regardless of where I place my stop, I will always have only 2% of my trading capital at risk. All right, I'm debating whether or not I should roll my stop in below this little swing that we have right here. In fact, I can go with the swing strategy and, you know, perhaps give it 3 ticks off of the low. Sure, let's do that. So now you see Trade Manager took my stop from down here, rolled it up below the low, which is my stop strategy that I'm currently using. Let's see if, oh, parabolics are a little bit too aggressive right now. I'll go to parabolics if we get any traction here, just so that you can see how the Trade Manager, all right, I'll do that. The Trade Manager is now going to roll my stops according to the parabolic strategy. So wherever you see these blue dots, that's where my stop loss order would have been. There, I don't know if you noticed that, but the Trade Manager, as this bar completed higher, took my stop and rolled it a little bit higher still. So the nice thing about this is that it's pretty much hands off, right? I can put this trade on the shelf now, knowing that the Trade Manager is going to handle it for me, and I can be looking for other opportunities. Now, case in point, we've actually already hit our high probability target and our break-even trigger. So our trade would currently be at break-even. I'm going to try to run this out again just so that you can see how this whole Trade Manager tool works. Hopefully we're not going to get too much of a reaction here. I fully expect the market to be in a trading range today. Yeah, we're starting to get a little selling pressure as I think the sellers are trying to define the top end of what is most likely to be our trading range. Okay, Falcon Swing Trader. This is our swing trading tool. We pay very close attention to this trend line. This trend line here is going to give us our directional bias. So when the trend line is red, we're looking to sell. When the trend line is green, we're looking to buy. Right here, this is our classic trend change signal. And it's pretty easy to identify. It occurs when the trend line changes color. And again, it's pretty much the first signal where everything is in sync. The classic pattern has this move that changes the trend line from red to green. Then we have the sellers trying to fight the market back. And then we have the buyers coming back with a buy signal. So the trend line maintains its green color. The filter is green. Signal is green. That's a buy signal. Here's the trend change signal in reverse. There's the sell signal. So the trend line changes color, and we have this down up, down pattern. And you can see that had some pretty decent follow through to it as well. Again, the signals always develop with a warning dot and an audio alert that tells you that the signal parameters are starting to be met. And then when the signal is complete, we get the triangle and the hash mark telling us that it's time to make a decision. The hash mark, of course, is just a suggested entry point. Here we are on the Eagle Trend Trader. The Eagle Trend Trader has this colored band running through it, and no, it's not an Ichimoku cloud. Everybody always asks that. I know it looks like it, but it's not. This band gives us our directional bias. So when the band is stacked this way, we're looking to buy. When it's stacked the other way, we're primarily interested in selling. So right now, we're in more of a seller's market, at least according to the Eagle Trend Trader. You can see here too, the day was very choppy yesterday, even though we did produce some decent signals. Whenever the market encounters the hard edge, the lower edge of this band, that's called the hard edge, we anticipate some sort of reaction. So we had a couple of red bar buy signals right here off of the hard edge. High probability signal on the Eagle. You can see the market drifts into the hard edge. The bar color actually changes to red, but we end up producing a buy signal. Notice we've got green warning dots, triangle, hash marks, and we had some decent follow through after that, albeit it was a little choppy. Normally with the Eagle, here, let me dial it back a couple of days before the FOMC. Normally the Eagle trends more like this, where when it encounters the hard edge, produces either a hard edge bounce or back here a red bar buy off of the hard edge. Again, a high probability signal. We tend to have a little bit more follow through, a little less choppy along the way. See, this is all just waiting for the FOMC, but the market still responded to the signal. We had the red bar buy signal off of the hard edge, high probability signal. It did go higher. We would have had to, keep a slightly more conservative stop to avoid getting stopped out prematurely. And let's take a look here now at the Raptor. The Raptor also, as I mentioned before, it incorporates elements of the other three birds. So we have stolen the band, the trading band off of the Eagle. And we've actually incorporated two trading bands here on the Raptor. The bars print according to the Hawk and Falcon parameters. So it's essentially a hybrid of the other three birds, all into one. And we're producing a cloud crossover signal here, so we may actually see the market try to head a little higher. We'll give that a minute to mature. Again, we haven't seen a real decent retest of these lows, so I'm reluctant to get too crazy on the buy side, but we'll see how it plays out. This little dial that you see here, this is called the Geiger counter. This is an add-on. This will work on any chart, not just the DTS charts and not just the Raptor. It will work on a 5-minute chart. It'll work on a tick chart. It'll work on any kind of chart that you're using. This is essentially a tape reader, and what it does is it gives you the feedback of the time in sales. So right now we can see that the sellers are very strong. You see how the dial has pulled over here and it's holding, it's holding, it's holding. That tells us that the sellers are really chewing through the sell orders. And we will probably see a little bit of a short-term move here to the downside. If we don't, if this support continues to hold, that tells me that the buyers have in turn absorbed all that selling and that prices will definitely move higher. But right now, see how the dial pulls and holds and holds and holds. That's a pretty good indication we're going to see the market head lower, at least for the immediate short term. And this histogram kind of gives you a brief history of the recent time and sales. And they look to be fairly balanced for the most part. Sometimes we'll get these buying or selling spikes, and there will be nothing on the other side. And that tells us that the market is lopsided, and we're going to see a pronounced move in that direction. But right now, it looks as though the buyers and sellers are pretty balanced, which is, of course, what we would anticipate going into an FOMC meeting. Okay, waiting for this cloud crossover signal to confirm itself. The other way of looking at this market, which is what's making me a little bit reluctant, is that this may just end up being a great big bear flag at the moment. Right? And if it is a bear flag, we would anticipate prices to head lower, retest the lows. I'd actually be a little bit more comfortable with that, I think. All right, good question here from Sammy. And your questions are welcome, please. On a day like today, it'll help pass the time because it doesn't look like we're going to get a whole lot of signals before the FOMC meeting. So Sammy asks, can we know the volume of the buyers and sellers to know the direction of the market? Great question. Okay, so you've probably heard that volume is a predictive tool, right? That price will not move without volume. Problem with volume, of course, is it's kind of difficult to interpret. The Geiger counter gives you immediate volume. Actually, I can go back here to the Raptor and show all this. The Geiger counter will give you the immediate volume feedback. So it does it via the histogram, it does it via the needle. The needle will change color depending on whether the market is more bullish or bearish, and it does it via this dial, especially when the dial pulls hard to one side and holds, as it is doing right here. You can see the sellers still trying to pour it on. Oh, there come the buyers fighting it back almost equally. So if you see the dial pull one way or the other and not get balanced out, that tells you that there's going to be some short-term buying or selling pressure. Right now, though, they seem to be relatively balanced. The other tool that we have is the dynamic equivolume bars. Now, the volume is a little bit light this morning, or it fell off rather quickly. It looks like there was some volume right out of the open, but since then, it's more or less evaporated. The dynamic equivolume bars is a tool from Indicator Warehouse that changes the width of the bar to represent the volume on the bar. Now, equivolume charting is not new. What is new about the dynamic equivolume bars is that it will work on any chart. Normally, equivolume bars only work on candlestick charts, but the dynamic equivolume bars will work on any chart style, including the mean Renko bars that I'm using here from Indicator Warehouse. So we just produced a little buy signal here. I'm going to pop in a buy order, again, just so I can show you how these things work. So you can see here on the Raptor, I'm using the Trailblazer. The Trailblazer is a slightly different version of the Trade Manager. And Sammy, I'm not finished with your question. I've got a couple things to add yet. But I just wanted to explain why I'm putting an order on here. We're getting a cloud crossover. With the Trailblazer, I can enter the market simply with the buy and sell buttons. You'll see the risk component is not down here. So it's kind of more of a one-click system. You can use this on any chart chart as well. In other words, you can use it on the Hawk, you can use it on the Raptor, you can use it on the Eagle, whatever you want. I just happen to have it assigned to my Raptor trading tool. So you saw the prices head up there. They hit the break-even trigger. They hit our first profit objective. I haven't enabled a stop yet. I'm going to do that for you right now. We're going to use the ATR stop. I'm going to enable it. And you can see the Trailblazer automatically gives me my stop. I've already hit the break-even trigger. So the trade is now at break-even. So we've had two contracts in play here. One contract had a 20-tick target, which we've already hit. And the other contract is now in a running position. And it will run out based on the stop strategy that I've selected. So you can see it's going to follow these blue dots. If the market continues higher, the trade manager is going to pick up my stops and roll it according to that stop strategy. So this too now is kind of hands off for me. But going back really quick to Sammy's question about the volume. So with the dynamic equivolume bars, you can see some of these bars were wider and some are thinner. So the wide bars have a lot of volume to them. The thin bars, not so much. Now the funny thing is, most people think that, when the market's trending, it needs to have wide bars to it. But in fact, it's just the opposite. When the market is trending, we're going to get these thin bars. That tells us there's not a whole lot of conflict between the buyers and sellers. And right now it looks as though the buyers have control. See how the dial is pulled over hard and the buyers are chewing through some of those buy orders. It looks as though the buyers have control. And when the bar gets wider like this, that tells us that we have a lot more selling pressure coming into the market. The fact that this bar has a tail on it tells me that the buyers won the battle here, this volume battle, but it also tells me there's a lot of price sensitivity around this 43, 62, 63 area. If the buyers take over this bar as well, then we're pretty much in the clear and we're going to see prices continue higher. So looking back in the chart, I can see that, there was a whole lot of volume going on here. And then, heavy volume here, at least relative, to some of these thin bars that we see. So heavy volume all through this area. So I knew this whole little region right about here was pretty influential, right? Because we've got strong volume on these bars. I can tell just by looking at them. Then we had another high volume bar here. The market breaks out, comes down. The bars are a little thicker, but then we come back and we produce a high probability signal. So everything is looking very bullish at this point. That's why I wanted to point out this signal before it ran away on me. So that you guys didn't think I was doing this in hindsight. And then the Geiger counter at the time when the signal was printing, remember we were watching it all through here and it kept pulling to the short side, to the red side here and holding and holding and holding, and yet there was no follow through. And I told you if there was no follow through on the downside, that tells us that the buyers are absorbing all that selling pressure and that the support will hold. And then we produced this signal and the dial started to pull over here to the green side and hold and hold and hold. And that told me that it was pretty much a sure thing. We would at least see a little bit of a move higher here, at least enough for a decent scalp or even a little bit of a swing trade. All right, so that's how all that unfolds. Now you can see I'm producing another warning dot, so I might get another buy signal out of this. I've already got my stops at break even, so at this point it doesn't matter unless you want to do something with the rest of your open profit. You've got another $70, $80 sitting there just waiting for you to pick it up. We've already banked $100 on that little uptick. So I suppose at the end of the day you can always let your bank account be your guide. Darko is asking, where can I get the Geiger counter? Well, you can get all this at Indicator Warehouse. I'm going to give you the link here right away so that you can find it. If you go to the Indicator Warehouse page and you go to the system add-ons, so I'm going to put the link in the window here for everybody. You'll find some of these tools. The Geiger counter is available on that page also. Very, very useful tool, I find. Okay, so we're still kind of nursing this trade along here. We're getting near the top of the hour, which is usually when we expect the market to establish the range of the day. Kind of a quiet day, which is not that unusual. So here was our macro pullback signal on the hawk trade. That ran up a little bit. These yellow bars we pretty much ignore, except it did form a 4-arrow consolidation, which is a high probability signal. It's actually the only signal I'll take on a yellow bar with the hawk. Yellow bars are neutral by definition, so we avoid them unless we get 4 of them printing in a row. Not 4 yellow bars, but 4 signals. That's called a 4-arrow consolidation. That's right there. 1, 2, 3, 4. We would look to take the 4th signal as that's when we anticipate the market to resume the trend, which is precisely what it did. While we're nursing our Raptor trade there a little bit, let me point out here on the Falcon, we had that trend change signal right here. Right, so that one is sorting itself out. These lines that you see across here, this is also a system add-on. This is the ultimate support and resistance suite. These are support and resistance lines, 21 of them, which are forecast for today's trading session. No, they are not floor pivots, and no, they are not Fibonacci levels. If they happen to coincide, it's pure coincidence. We have the gold line, which is the median line. It's right in the middle of your assortment. Then we have the primary resistance, which is where we're trading right now, and primary support. These 3 lines tend to influence the market considerably. Once the market gets above the primary resistance and stays there, then we usually expect a bullish market. And once it gets below the primary support and manages to stay there, we usually expect a bear market. But you can see it does a pretty decent job of highlighting where support and resistance is likely to occur. See, hit the numbers down here, hit it right up here, hit it there and there again. And here too, this works on any system. It doesn't just work on DTS. You can use this on time charts or tick charts or whatever your flavor is. So now we're into the primary resistance and we're kind of seeing the market react a little bit. They're also useful as profit objectives and places to trail your stops. All right, remember how I was telling you about the equivolume bars? Look at all the volume coming in here. So traders getting a little bit reluctant about letting the market get too far past 43.64-ish. I'm going to change my stop strategy now to parabolics. I'm going to let the parabolics be a little bit more aggressive and perhaps lock in a little more of that profit. See, the needle on the Geiger counter now is red, so the overall bias tends to be a little bit more bearish, but that does not necessarily mean that prices are going to head lower right away. Rather, it's just telling me, hey, Eric, maybe you want to do something with your stops. Maybe you want to protect a little bit more of that open profit. And as I said, always let your account be your guide. We've got $115, $120 in open profit sitting there. For the taking, all I have to do is hit that close button. All right, that's a welcome sight. See how the dial is pulled over and it was stuck there on the green side? That's some buyers chewing through the orders. We'll see whether or not that has any follow through to it. Come on, get up there. We're flirting with the overnight lows, or pardon me, lows, the overnight highs. See, right up here. That's probably what has encouraged the sellers to get a little more aggressive on the sell side as well. I didn't even look. Did we have a signal on the eagle yet? No, not yet. We had this green bar sell, but it never tripped. It was against our ATR line. That's a squiggly red and blue line that you see here. We use that as an added filter in that we want the signal to be on the same side as the ATR line, or the other way around, the ATR line to be on the same side as the signal. This green bar sell is one of our high probability sell signals. Let me roll this over so you can see what it would look like when it was printing. So remember I told you whenever the market encounters the hard edge, we anticipate some sort of reaction? Well, that's what we're getting here. We drifted into the hard edge. We're seeing a reaction. We're getting a green bar with a sell signal. That's a high probability signal. What I would need, however, is I would need for it to be in sync with the ATR. So even though the hash mark printed here, the hash mark really is just a suggested entry. Computers being computers, they need a very well-defined spot where to print a hash mark. So the hash mark always prints one tick below or above the signal bar, as the case may be. So the signal bar is this one right here with the warning dot, and then it eventually printed the triangle and hash mark. So the hash mark prints one tick below the low of that bar. But our signal bar would actually have been the next bar. Had this traded lower, it would have traded like this, and it would have closed below the ATR, effectively flipping the ATR higher. The ATR would have done one of these, would have gone up here, and would have started drifting like that. So now everything's in sync. So this now becomes our signal bar, and we would look to sell below the low of that bar. See if I can find you an example. See right here? So red bar buy signal, it's against the ATR, right? The ATR and the signal are not in sync. This is the opposite of the green bar sell. So there we are, we're waiting. Okay, this now becomes our signal bar. So I would look to buy a tick above there. So I would have been filled on this bar right here. Take a little heat for a couple of bars, and then we come back with another red bar buy signal. But you see, this one I could have taken on the hash mark because it's already in sync with the ATR, with our filter. And then away we go. A little bit of a choppy ride, but it's moving higher all the same. This tool that you see here in the top left corner, another add-on, this is called the Trade Forecaster. What the Trade Forecaster does is it tells you the current market condition and what the next one is likely to be. So right now we just moved out of trend mode. We're into swing mode, although trend mode coming back in a couple of minutes. Again, normally these numbers stay within their environments a little bit longer than just 2 minutes, but it just goes to the nature of the market today. All right, so it looks as though we got stopped on our signal here. The Trailblazer managed my trade. The market dipped a little bit lower and took me out on my parabolic stop right there. And we didn't even have to watch it to do it. All right, nothing really going on in the gold market this morning. Crude oil's creeping a little bit higher. We do have crude inventory at the bottom of the hour. We'll flip over to that as we get a little bit closer. Right now we're just drifting, however. And normally it isn't like this. Normally the markets are a little bit more active. They give us a few more opportunities. Really? Are you guys really going to press higher? Here we come with the Falcon signal. This is just your basic trend line touch signal. We've got the warning dot. We don't have the signal just yet. You can see we're still stuck against this primary resistance. I'd actually feel a little better about shorting it, but hey, a signal's a signal. And like I said, we don't have it just yet. So there's the signal printing. I can tell from my handy dandy little logic counter that this bar will finish at 43.65 half. That enables me to place my entry one tick above 43.65 3/4 because I know that's where the hash mark will print. Currently we just have the warning dot, but if this bar finishes higher, there's a pretty good chance it's going to produce my triangle and hash mark. Now the trade manager enables me to preset as many as 3 profit targets and 3 how I want to manage each one. So currently I'm all in, all out. I have 100% of my profit on target 1. But if I chose, I could split it up. If I was, in this case, I'm only trading a single because given the way I've set up the trade, that's all I can afford. But if I were in a position where I had 2 or 3 contracts, I could split it up so that maybe I want to take 30% on target 1, 30% on target 2, and leave the third one on as a runner. That's an option. Let me demonstrate this principle here on the Hawk because it's a scalping tool. The setups are often a little bit tighter, but let me go back here and show you. This is our first micro macro cross signal right here. And this is something that a lot of you will be doing incorrectly in that you're trying to keep your risk small. So what you do is you jam your stop in really, really tight. But what ends up happening? Well, the market brings you in and then it reverses on you a little bit and takes you out and then goes up and hits your profit target. Oops, sorry, went a little bit too far there. It goes up and hits your profit target and very often goes much further. So what should you be doing? Well, first off, you need to give your trade a reasonable amount of room. And this is where the trade manager is a lifesaver, quite literally a lifesaver for your trading account. So notice what happens when I place my stop really, really tight. I've got $330 at risk. Now, don't fall out of your chair. That's based on my account. That's 2% of my capital. You may have more, you may have less. But notice the quantity size. I'm trading 6 contracts. Okay, what happens if I place a more reasonable stop? Let's say I want to place my stop, about halfway. Oh, look at that. The risk amount is still about $300. What if I place my stop way down here? Oh, look, the risk amount is still about $300. It's a little bit of a rounding error. I can actually set it a little deeper. But what has changed? Well, the quantity has changed, right? Here I'm only trading a single contract. Here I'm trading 3 contracts, and here I'm trading 6 contracts. But the risk amount never really changes, right? The risk amount is always at 2%. So what does that mean? Well, that means that I can set a trade with a reasonable stop, knowing that even if this trade comes apart and stops me out, I have not lost more than I can afford to lose. And not only that, but I'm correctly capitalized so that when the trade works out, I also maximize my winnings, my earnings. And that's the exact opposite of what most of you do. Most of you will lose more than you can afford and earn less. Here's a real quick example. And how many times have you guys done this? And I'm speaking from experience. I'm not talking down to anybody, believe me. We've all been there. You start your day and you say, okay, it's a new day. I'm going to be conservative. I'm a small account trader. I'm only going to risk 3 contracts. So you go in the first, and let's say you've got a $200 risk exposure per contract. So in other words, your first trade, you're risking $600. And the trade goes south on you, you get stopped out, you lose $600. The next trade does the same. You get stopped out, you lose $600. Now you're saying, oh man, the market's got my number today. I'm already down $1,200. What do? I know I'm going to not trade 3 contracts. I'm only going to trade 1 contract. And of course, that's the trade that hits. And let's say even if you make $300 or $400, you're still down $800 on the day. So you overcapitalized on your losing trades. You lost far more than you could afford. You're losing $600. I've got my risk confined to approximately $300, right? That's how much I can afford. If this trade goes south, I lose $300. That's only 2% of my capital. If this trade works out, I've maximized my earnings. I've earned $150, whereas you would have only gone in with a onesie, you would have only earned $50. I'm hoping you see how this is starting to work, because it's a very, very important concept. All right, so let's go back now to our Falcon trade. I heard it engage. Now we're still kind of struggling a little bit here. We're coming back with some warning dots. Not exactly what I wanted to see. We'll give it a bar or two here to sort itself out. If it doesn't start responding, I'm going to bring my stops in rather quickly, just because that's the nature of the day today. We get a little fade through the support line and then the market snaps back. Get a little fade through the resistance line. I don't want the market to snap back on me. So this is really last chance for the buyers now. It is a valid signal, this trendline touch signal. It's not as high a probability signal as the trend change signal, which is why I'm looking to be a little bit more aggressive here with my stop. Come on, get up there. We'll give it a little help. Give a little push with the mouse. Sometimes that helps. All right, buyers, last chance. Come on. All right, I'm going to show you one of the more aggressive stop strategies. Actually, I'm going to check out parabolics first. Where are the parabolics at? 43.61. I've also got this bar high low strategy. This is our most aggressive stop strategy. This one takes you out on the first sign of weakness. All right, let's go with that. That's all you get. You're just going to get that one bar. So if they fail at this point, then you might as well stop me out. Are we going to get a counter trend signal somewhere? No, not yet. Oh, they're trying. You see here on the Geiger counter, I don't know if you noticed the buyers are pulling over hard. They're trying to chew through some of those orders. Got to get above the high of this bar right here. Got to take out that 43.66 half. Need somebody to get in there. Ah, thanks, Tony. Tony reminding me that the crude inventory report out in about 15 minutes time. I think we're going to get tapped here in a moment, folks. I've already adjusted my stop considerably, so it's not really going to be a stinger. But it's kind of a funny day today. We're not getting that follow through that we should. Notice the width of the bar. So a lot of volume coming into the market at this point. And I took the early tap out. I think we're going to see prices drift a little bit here, normalize a little bit. We might even get a soft edge sell signal, which is a counter trend signal here on the Raptor. I don't see any of our counter trend signals on the Hawk or the Falcon just yet. All right, let's bring crude oil over here. Here's crude oil on the Falcon. And we produced our trend change signal right here, just as crude oil opened this morning, about 15 minutes into their session, and a nice little progression higher. I do believe that hit its profit objective. Here's the problem with crude oil. It's so expensive you can't cover it. Did you notice what happened though? Trade Manager would not allow me to take that trade because it was more than my established risk. So with crude oil, I always end up having to take a relatively tight trade. And there we go. Crept up there, hit our high probability target. Came down, produced another signal, our trend line touch signal. Nice little bounce here off of the secondary resistance line, and the signal's printing right there. I could probably use the secondary resistance to cover the trade. And there we go, hit our next profit target. So very profitable morning trading crude oil. Should have been watching that. And here we are off of the secondary resistance. Now, normally what we like to see is a market that is moving sideways into the inventory report. What that allows us to do is use our OCO function and bracket the range. So bracket a high and bracket a low, and then just let the market trade the breakout side. Unfortunately, we have a little bit of a trend going on here in crude oil this morning, which is kind of throwing a little wrinkle in our in our trading strategy. The other thing you can do is you can always let the report come out let that initial flurry settle down, and then you'll see, the high and the low. I may try that strategy today versus trying to trade a very tight range like this. Or, hey, why not? We're in a trading room. Why not do both? Why not start out this way? I'm going to go with a much more conservative stop. Actually, maybe I'll go to the chandelier. Chandelier is a pretty conservative stop strategy. Make sure my stops are enabled. When you use the OCO strategy, it's important to remember that these orders are live the moment you put them on your chart. And we'll come back to that in just a moment. See if there's anything going on here in the NASDAQ. No, not yet. Still kind of ranging. See how we're drifting here on the hawk. We're producing a macro pullback signal, but honestly, I think that's going to end up drifting into yellow bars here any second now. If it gets into a red bar buy scenario, that's also one of our high probability signals that we look for. I might be inclined to give it a little run higher, but I do believe we're going to see the market drift lower still. All right, so we're not missing much there. Let's go back here to crude oil, and I'll put a Geiger counter on here so we can watch the order flow. All right, so we're just waiting now, waiting for that inventory report. Actually, the volume's pretty decent going into the report. A lot of times we'll see like onesie-twosie sort of stuff here, and then the volume pick up as the report hits the floor. We also have our support and resistance suite. So we can see, again, where the market is falling on those lines. And right now, a definite bullish flavor. At least for the short term. And how long do we have? Oh, we got about 5 minutes still. So just looking around here a little bit, here's gold on the hawk. And let's see, our first micro macro cross signal was right here. This is our high probability signal. Remember, we ignore the yellow bars. This one was not in sync. We had a signal print, but our macro line was not in sync. It was still gray. This signal was in sync, but it never triggered, and then we went into yellow bars. So this is actually our first micro macro cross signal, that one right there. And you can see we had some nice follow through from that. Came back with a macro pullback signal. The macro pullback signal, easy to identify. Everything stays in sync except the micro line. The micro line changes color. Market comes down, produces a signal. See, warning dot, triangle, hash mark. And have we hit our profit target there yet? I tend to double the profit objective on gold. No, not yet, but we're working on it. See, again, the risk amount is always contained to an amount I can afford. And see the capitalization? I didn't go in here with a onesie. I'm not being a onesie-twosie trader. I'm capitalizing myself correctly so that when the trade works out, I maximize my earning potential. See, if you're a onesie-twosie trader, let's say you're trading 2 contracts all the time. So we've got $90 at risk here on this trade. Sure, if the trade goes poorly, you lose $180. We'll say 200 for easy math. But if the trade works out, you only earn $200. I have earned $400. See, very, very important concept. Even if the trade goes south, okay, you've lost $200, I've lost $300, or technically $360. But this is an amount I can afford to lose. If I'm not comfortable with $360, well, then I'll dial down the risk amount. I'll risk 1% or maybe 1.5%, whatever the case may be. Right? Trading is very much about probabilities. You want to give your trades a chance to work out. Don't strangle your trades by keeping your stops overly tight. Very, very important concept. All right, what do we now? Only a minute or two away from the inventory. We're going to see the Geiger counter get a little bit more excited here as we get closer to the report release, the inventory report. So the market in a little bit of an uptrend. I'd actually really like to see it head higher, but I got a bad feeling the market may try to reset itself. End up normalizing and heading back down here somewhere to the median line perhaps. Or maybe even down to the primary support. We will see. 1 minute. See how the Geiger counter is taking turns. Now the buyers are chewing through orders, loading up on the buy side. And again, if we don't see follow through to the buy side, that tells me that the sellers are absorbing all that buying action, letting them load up, and then boom, they're going to fall. So we had a little bit of a sell spike through here. Wasn't really counterbalanced by the buyers, was it? Well, the buyers really trying to load it up. All right, here we go. It's almost the bottom of the hour, and we're going to see the market. Normally, crude inventory is a pretty explosive report, although there have been some days it makes you wonder. Yeah, there go the buyers again. They're really loading up on the buy side, and yet we're not seeing the follow through there yet. We'll see whether or not they can pull that market over or not. Oh, they're actually honoring the ranges so far. I didn't think that they would. I thought we'd see a little bit of a fake break one way or the other. Working on a possible trend change now. So our trend line has changed color. we'd be looking for a sell signal now. Our filter is already in sync. Trend line is red, bars are red. But I'm doing the little OCO style trade here. See, look at that spike in volume right there. All that buy pressure, and then the sellers came back, and then the buyers come back. Oh my gosh, what a crazy market crude is. Crazy crude. And they're just stuck sideways now. That was odd. So, we have a pretty well-defined range. If you wanted, you could tighten your trade parameters even more. Sell below, looks like around 37.43-ish. Buy above 37.80-ish. What's with that? Just stuck in a sideways range. That is not at all crude-like. Yeah, Tony says the buyers and sellers really know their pivots. That's for sure. They're really honoring these areas. I'll leave my entry below this support line. I don't need to get a real early fill. So the seller's trying. They're trying hard. You see we made a slightly lower high relative to these. You don't want to micromanage these things though. Come on. Oh man, are they not even going to allow me to show you the OCO function? So working a possible trend change now to the downside. We don't have a signal yet, but we do have the beginnings of one. And now prices are getting some support off of this secondary support line at 37.33. There we go. All right, so notice the other order canceled. We have our automatic stop in play relative to our stop strategy that we've selected. We have our break-even trigger, which you can eliminate if you choose. The OCO function does not have the auto profit target, however, because your profit target and your risk are balanced, right, based on your risk percent model. Come on. See, somewhere through here we need to see our trend change signal. That's this guy right here. Except now it's going to be reversed. We've got the down portion. We need to see where the buyers are. Then we need to see the sellers come back and push the market lower still. That's why I'm trying to keep my stop so far back. Or maybe the sellers aren't even going to allow them that much. Well, we're going to throw this one back on the shelf for a moment. Let's see what's going on here with the NASDAQ. Crude oil just kind of taking their time there. With the NASDAQ, it looks like they've pretty much gone sideways for the most part. We're drifted into yellow bars. Signs of a very neutral market. People are always asking me, hey, Eric, how do I trade a choppy market? Well, you don't really. Choppy market by definition has no follow through. And as traders, we can only make money if the market gives us some follow through. But what you can do is identify when you are in a choppy market, and that's where the DTS system is very useful, especially with a tool like the Hawk, where we've got the yellow bars, we've got the mean Renko bars. You can plainly see that this market is kind of stuck in a sideways range. There's not much that we can do about it right now. We're producing some signals here on the Raptor near the high. Again, it's just a basic signal out of the cloud. It's not really one of what I would consider one of our high probability signals. The market still owes me a retest of the low, but I don't know. Seems reluctant to give it to me. Well, we're just kind of stuck here now. We'll give it another couple minutes. If the market continues to drift, which, you know, it very well might, let me just double check when those FOMC minutes are supposed to be released. Oh, right now. That explains why the market is dead quiet. Oh, sorry. No, not right now. I gotta get my clock set right. Yes, thanks, Tony. 2 p.m. Eastern. Yeah, my clock and the website were not synced. That can give you some bad times. Yeah, so the market's very likely to continue drifting until that time. Yeah, so another 3 hours, give or take. I don't know if anybody has any questions. If not, you know, we may just button up the room a little bit early. This is the trading equivalent of watching grass grow. There's not much going to be going on until those FOMC minutes are released. So if anybody has any questions, I'll let you type away. Otherwise, we may button up the room a few minutes early here. Remember, if there's a market you'd like to see, I can certainly highlight a market for you if there's something of interest to you. But honestly, I think we're just going to see them chop about here a little bit. We've had a whole lot of sideways trading. It's most evident here on the hawk. When you see a market balance like this, some traders refer to this as barbed wire, and for obvious reasons. It's equally above and below, not really drifting too far from the average. And just like barbed wire, it's an easy place to get hurt. No questions. All right, you guys, we're going to close up the room here a few minutes early. And yeah, I wish there was more going on today, but there isn't. So what are you going to do? Have yourselves a great day. Thank you for your attendance. DTS owners, I'll see you in the trading room tomorrow morning. We're going to no doubt have a little bit more action going on at that time. And yeah, if you're trading this afternoon, you really have to wait for the FOMC minutes to come out. And there's not going to be much of a trading day left after that. All right, you guys, have yourselves a good day. We'll talk to you next week. DTS owners, I'll see you tomorrow. Bye for now.